Hello, and welcome to the 14th episode of the Markets at a Grand series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome. Once you join the space, make sure that you comment with a hi on the live comment section, and these will confirm that everything is working just fine. So hello, Nasim. Thank you for joining this session. So remember, on each and every Tuesday at 4 p.m., we do this particular series where we try to understand what's happening in the market, what's currently moving in the market, what are we expecting, and try to identify the key market levels in order to improve our trading. So remember, this is not investment advice, neither is it a recommendation to trade. So you should always do your own research. This is purely to enhance your education and understanding of the market. So hello Apollo, hello Maurice. Thank you for joining the session. Let's get on with this. So first things first, we'll start with the major highlights of what's happening in the market right now. So one, we know that the Chinese New Year holiday is already in progress. It started on Sunday and will proceed through to Saturday. So during this period, the Chinese stock markets will be closed. There will be little or no activity in terms of manufacturing and production in China as people travel to their homes to celebrate the New Year. So most Chinese people are expected to take a majority of their annual leaves or annual leave days during this period. And this is expected to slow down production. So after missing out largely on the events during 2021 and 2022 due to COVID-19 restrictions, this year is expected to have increased activity. So the Chinese New Year is the world's biggest human migration event ever. So during this period, only a very short period of about 7 days, though it can extend to a month or two, depending on how strong the consumer is. We normally see a lot of travel happening in and out of China, as well as within China, as people move to and from one place to another. So in 2019, we saw the Chinese New Year holiday experiencing 3 billion trips. On the other hand, in 2021, we saw 1 billion trips. 2022, it was 1.1. In this case, we expect the number to rise to 2.1 billion trips. So as an investor, I know you are trying to understand the angle in this one. So looking at the transport sector in China and companies that are dealing with this transport, they might benefit from increased activity or increased capacity during this period. At the same time, you might also want to look at tourism in China, as well as retail industries, or even sometimes entertainment, especially in Macau. So besides these, the Shanghai Stock Exchange and also the Shenzhen Stock Exchange will be closed for the entire week. The Hong Kong Stock Exchange is closed yesterday and today, so it will be opening on Wednesday. Then the Singapore Stock Exchange was closed on Monday. However, it's open today, so we'll be expecting further activity going ahead in the week. So as well as for the global financial markets, they are open, but then they are experiencing lower volumes as a result of the Chinese banks and institutions not participating in the market. So lower volumes, but at the same time, we expect higher volatility. So besides this, now we want to look at the economic calendar and see what has been happening since the beginning of the week. So I'll try and share these. So on Monday, as you can see, in China, bank holiday, nothing much happening. Monetary policy meeting minutes in Japan. This was very interesting, basically showing that the members of the Bank of Japan monetary policy basically consulting with the Ministry of Finance to try and see if there is any changes they could implement to the current monetary policy. However, according to the meeting, this is the previous meeting they held, they chose to maintain policy as is, that is to continue with quantitative easing indefinitely, and at the same time maintain rates at negative 0.1%, whereas they continue observing the inflation data to see if it reaches their targets. So earlier this morning, we saw it happen. This is data from the Bank of Japan. So we saw core CPI. This is the biggest, the broadest measure of inflation in Japan, basically showing that the core CPI was up to 3.1% in December compared to 2.9% the previous month. So this was a move in the right direction. So just to give you a hint of what we are looking at, we are looking for at an economy that was really struggling with having high inflation. So mostly struggling with deflation despite having quantitative easing. But then since the accelerated quantitative easing in 2021, we have seen inflation gradually rise, and now it's approaching their desired targets. So with the Bank of Japan reaching its desired targets, we will be expecting them to start abandoning the quantitative easing program, and this is expected to strengthen the Japanese yen. So what we are seeing here in the charts is that the reaction in the markets after the news early this morning is that the Japanese yen started gaining some strength against the dollar. You can already see here. So since morning, the JPY was very strong against the dollar. And also, if you look at the JPY against other currencies, it was relatively strong. So, for instance, against the pound has been strong all day. And if we take one more currency, this is against the euro. Also, it has been very strong against the euro. So we are expecting that the Japanese yen will now start strengthening against other currencies as investors prepare for a potential reversal in central bank policy in Japan. So positions along the lines of buying the yen and selling other currencies might be the new target going forward. So that being mentioned, we can go back to the economic calendar and see what more is happening. So this week, we're expecting a lot of PMI data. This is what we call Purchasing Managers Index. It basically tracks the procurement departments and does a survey of the orders that have been made for production. So in this case, we separate these into services and manufacturing. So we already saw the flash manufacturing PMI as well as flash services PMI at 49.8 and 48.3, and this was for Australia. As you can see, if the number is below 50, it basically indicates industrial contraction. If it's above 50, then it indicates expansion. So this is a bad hint, basically indicating that the industry is contracting in Australia, and there's a good chance that the economy might be headed for a recession. So if you look at flash manufacturing in Japan, 48.9, also a contraction, indicating that the economy is still quite weak. Then you move on to Eurozone. Here the Euro flash manufacturing PMI turning positive for the first time in a while. Then flash services still contracting. Germany the same, while services expanded for a moment. Then for the entire Eurozone, manufacturing was contracting, while services were expanding. So on the other hand, when you look at the UK, still below 50, 46.7 and 48.0, indicating a contraction, which is basically bad news for the UK. So as you can see, this particular sequence, that a majority of the European economies, as well as Asian economies, are indicating potential for contraction. Then we are expecting that the central banks will get more aggressive. Will get less aggressive because they are afraid of hurting the economies. So we know last year was a period where we saw central banks being very aggressive in hiking interest rates, but now they are slowing down in order to avoid driving their own economies into a recession. So we already saw it happening with Canada. So among the major news for this week is the BOC rate statement as well as overnight rates. So since they were doing 75 basis points and then they did 50 basis points, and now you can see the expectation is a much slower rate hike of 25 basis points. These will drive the interest rates in Canada to 4.5%. So this slowing down is in preparation for a pivot So you might see these currencies changing a direction. So on one hand, they were strengthening as a result of the aggressive central banks. But as the central banks begin to slow down, then the currencies start taking the opposite direction. So next week, if you look at, I think this is a second, this is when you'll be seeing the US interest rates. So just to give you a highlight, where is that? Yes, this is FOMC. This is on fast. So as you can see, the expectation is from 4.5% to 4.75%. So a 25 basis point hike by the Fed, basically meaning that it's slowing down, and this would be the one factor explaining the weakness of the dollar this week. So back to the market, now that we understand that the Federal Reserve Bank of the US is slowing down, the Bank of Canada is slowing down, then you might want to start by observing the dollar index and how it has been trading. So the dollar index has been trading sideways, but with a slight angle towards the lower side, basically indicating a much weaker dollar. So as you can see, it has been a week after week. So if you are to do a weekly chart and then zoom here, you'll notice that for the last 2 weeks, the dollar index was losing, but this week seems to be on a positive, but not that much. So if I zoom out here for a chart, then you can see this was a week where it was going down, pulled back down, continued moving down, sideways but down. And this week it's moving up, and perhaps once it gets here, we'll continue moving further downwards. So with that understanding that the dollar is currently weak, then you notice that Euro USD has been breaking towards the upper side. So remember, this was a 7-day range, then a break towards the upper side. So potentially a movement even higher. So pound USD has been on a bullish momentum before starting to drop earlier today. So this was the prevailing trend. So we can all see this as the prevailing trend before breaking here. And this is one of the most important news for the day, that the pound just found itself in a losing environment. And if you look at all pound pairs, they're currently accelerating down lower. So this is as a result of the PMIs, or the Purchasing Manager Index data, indicating weakness in the UK economy, which led to the sale of the currency. So we are seeing further downside potentially in the pound USD as well as other pound pairs. So as you can see, for the last couple of hours, this is what has been happening. So this is a pound yen currently making a very strong drop. If I can find another one, this is euro pound shooting up. Basically, the euro strengthening against the pound. So it's all the same story happening over and over again. So if you have any questions, feel free to type those questions in the comment section, and I'll be responding to those questions right away. So hello, Reto. Hello, James, Samuel, Josephat, and thank you. Welcome to the session. So as per the earnings season, we know that a lot of earnings are coming up this week. Some of the key highlights include one very popular company called Baker Hughes, which missed earnings estimates, but the stock was gaining as a result of a strong outlook for the rest of the year. But then there's more companies that are expected to report going forward. So the one company that we are expecting to report earnings today is basically Microsoft. So a lot of focus today will be on Microsoft earnings. So just to give you a highlight, Baker Hughes is an oil company in the US. So the stock edged high in the pre-market trading on Monday as the oilfield services company bullish outlook compensated for a slight miss on revenue and profit in the final quarter of 2022. So the company was up 1.1%, outperforming index futures that were largely flat. So the company really tried with 38 cents for the quarter, a little below the 40-cent expectation, but also it was up 25 cents a year earlier. Our revenue was up 80% from a year ago at $5.9 billion. So this was a good result from this particular company. We'll be expecting more earnings to happen today. So just to give you a brief highlight, let's look at Kiplinga. So today, being Tuesday, the highlight company will be Microsoft. It will be the first of the big tech companies to report the earnings this season. Sorry. So it will be the first of the big tech companies to report these earnings this season when it unveils its fiscal second quarter results after Tuesday's close. So remember, the earnings will be happening after the markets close or at the market open. So consensus estimates for Microsoft to report earnings of $2.3 per share, down 7.3% year over year, and a revenue of $53.0 billion, which would be up 2.4% year over year. So the actual outcome of the news will be compared with these expectations. So also, it's important to note that yesterday, Microsoft stock was up as it announced a multi-billion-dollar deal where it's basically purchasing OpenAI, the mother company that owns ChatGPT. So as you can see, yesterday, this should be good. So if you look at the 5 days, last 5 days is up 2%, and now yesterday it was up 0.98%. So we'll be expecting some further action on this stock, especially once the stock market opens today, and as well as tomorrow, since the earnings will be announced after the stock market close. So there's more companies that will be looking to report earnings later in the day. So one of them is 3M or Triple M, Agilicis, Canadian National Railway, Choloan Financial, Dr. Horton or DR Horton, Danaher, F5 Networks, General Electric, Ribaton, these are Intuitive Surgical, Investco, Johnson & Johnson, Lockheed Martin, Navient, Old National Bank of Packard, Raytheon Technologies, Texas Instruments, Travelers, Union Pacific, Veritex Holdings, Verizon, West Banco, as well as Western Alliance Banco. So all these companies will be reporting their earnings today. So if you want to dig deeper and do some research on any of your interested stocks, then I'll be sharing the link and you will go through it on your own time. So I see some good comments here. Would you check Euro New Zealand? Definitely. New Zealand USD? Definitely. Help me to analyze the pound USD. Okay, according to my view and liquidity in the gold market, we expect a buy zone at 1927. This is news of the dollar. Why is DXY weakening? FOMC has been the most aggressive. Interest rates parity, those should work for DXY. Hello, what's your take on New Zealand JPY and Audi USD? Okay, thank you. I see a lot of requests here in our comments. So let's see what we can do on some of them. So first comment or question I saw is on gold. So as you can see, gold is well on course on a very strong bullish momentum that keeps on strengthening. So you can see a very sharp rise here, followed by more or less what looks like a rising wedge. So I'm sure most of you guys already saw this when it happened. So then gold breaks to the upper side of this particular trend line and then keeps rising in what looks like a channel. And it seems to be retesting the lower side of the channel and pumping hard even higher. So there is currently a gold rush from top central banks, Central Bank of Russia, Central Bank of China, the Fed, all are looking and are hurrying to get gold in the markets, and this is driving prices higher. So there is already sentiment that the price of gold might move to $2,000 per ounce. So the idea is to look for any form of pullbacks and continue enjoying the bull run that has remained strong since the beginning of the year. So this was the price at the beginning of the year. So you can see the sequence here. So a sharp drive up, pullback, drive, pullback, drive, pullback, drive, pullback. And now the drive seems to be slowing down, but the trend continues. There's nothing to convince us that the trend has ended. So there's a good chance that we'll be seeing some further upside in gold. So the lower trend line here acts as the value area. So things closer to the lower trend line seems to be the value areas here. So if the market was to pull back and get to the value area, it would provide an even more significant entry. Sorry. So just to highlight. So anything close to these value areas will represent a very strong entry. So if the price of gold was to pull back, get to this trend line, then you might want to look for positions targeting even higher prices on confirmation of bullish entry. So the other question was on AUD-USD. AUD-USD has been one currency that we have been anticipating to go down. But what we are seeing here is a market that is consistently testing this resistance. So you can see the number of times it has tested here over the last 1 week. This is on the 4-hour chart. So first time, then the second time here, and then this seems like the third time that the market is still testing this resistance. So the idea is to look for positions on the lower side. So there's a good chance that the price will be finding that resistance very strong, and then dropping towards lower support areas. So from the 1-hour chart, we know that there is also another support area here along a trend line somewhere from these previous lows. So there's a sequence here where the market is consistently finding support. So in this case, if the market happens to find resistance here and pull back down, then some nice targets could be identified along this area. There's also this area here, and also longer term, and this is an extension all the way down to the lower trend line here. However, this would be based on a presumption that the dollar is strengthening against the Australian dollar. So if this is not the case, and the Australian dollar continues being strong, then we'll be looking at potentially another high level that was seen all the way back in August, and we will be seeing the price break the current level and rally to 0.71339. So this is an important price level to observe here, 0.71339. So the market could eventually break this, head straight for the resistance, and this would be an opportunity to buy the Australian dollar against the weak dollar. However, if the US dollar happens to strengthen, then we'll be looking at this chart moving further back down. So another question was on a cross there. I don't really like crosses because they involve more work. I've seen New Zealand JPY and Euro New Zealand. So let's try and look at New Zealand USD. So I'm trying to refresh to see how my chart, how quickly my chart loads. So I remember checking on these. Yes, in most of these New Zealand pairs, there's this resistance here that was hit either yesterday or today. So basically indicating a potential rejection of higher prices and a reversal. So this reversal, as you can see, it's pegged on a strong dollar. So it's only a strong dollar that will drive these prices back down. So in this case, if you're looking for a potential break towards the lower side, then you have to build a case for a strong dollar. So unless that happens, then you have to assume that the dollar will remain weak and the market will break this particular resistance and continue going up. However, if the dollar happens to strengthen, then the target remains very simple. Just connect this low and this low, and then you'd have a potential area target around 0.64. It's actually a round number that is very easy to target, but I would be very patient and wait to see what happens if price was to retest and perhaps break this level here. So that's a point of contention here to observe. So before you move to Euro New Zealand, you would first of all check New Zealand USD and see how it's performing. Compare that with Euro USD and then move for Euro New Zealand. So Euro New Zealand, as you can see, I think I had done an example here. So it's a market that is moving sideways, and this has been the story for quite a period of time. So as you can see, it has been making the resistance levels here that I've been marking with the blue rectangles here. So last week, there was a very strong liquidity grab here, and the market moved in the opposite direction after making the first break here. So upon moving downwards, notice that it went, found support here, retested the support with a force break, and then moved back up. And now, what we are seeing here is the market moving further back downwards, getting to support, and then attempting to go up. So I would say in such a case, it's easier to be patient and wait for the market to retest the area, just like it happened in the previous scenario. So notice how the market pulled back here again before making the actual move upwards. So there could be a chance that the market will pull back here and then give you a potential market entry to trade within the range and enjoy as the market goes back up. So this would be an idea. It would be based on patience. If it doesn't happen, well and good. But if it actually happens, then you are able to capitalize on that. So thank you very much, guys. Thank you for your time. Where do you get the information about central banks buying gold, and how do you tell this is not the normal demand? Why should the central bank buy now, not when the price was lower? So when we talk about central banks purchasing gold, they don't basically just go out there and then buy billions worth of dollars of gold. So they usually have a program where they are buying gold every month, and you will notice the changes in the volumes they are trading. So if they are increasing the volume, then we know that there is a gold rush. If they're reducing the volume, then we know that they are offloading. Of course, they're not that dumb. They don't want to make a very big order in the market that would eventually affect their own prices. So they want to execute smaller trades. But then right now, from what we are seeing since the beginning of the year, it's quite a hurry. So they are exposed. A lot of investors already know that central banks are buying gold. And with this information being out there, if you check on Bloomberg, Reuters, you most probably find an article there. Then you know that this accumulation of gold is creating demand and driving prices higher. So what made the dollar strengthen against most currencies today? I would say normal price volatility and also the PMI data. So weak PMI data in the Eurozone as well as in the UK, basically means that the dollar was now strengthening against the pound, because these two currencies were on the losing end of the data released earlier today. So yes, the Fed has been the most aggressive central bank, but now it is no longer the most aggressive central bank. So by far, the biggest estimate we are seeing in the market potentially on 1st of February is a 25 basis point hike, which is much smaller than what we expect in the UK as well as the Eurozone. So in the UK, we're expecting 50 basis points. In the Eurozone, perhaps even 75 basis points. And that is much more aggressive than what we're expecting in the US. So this inversion of central bank monetary policies, where now the European central banks are more aggressive than the US, is causing some discrepancy that is creating opportunities in the markets. So it's easy to identify that divergence and use it to identify directional bias in the market. So thank you very much, guys. Thank you for your time. and I hope to see you on the next session. So remember that this week we have a Twitter space on Sunday at 8 p.m. So follow the FX Better Twitter channel, and you will be updated when you have the space. So the topic for the space would be about central banks. So we'll be looking at monetary policies and how the monetary policies influence the value of currencies. So thank you very much, guys. See you on the next session. So is this the right time to buy stocks? I don't think it's the right time. I think it's a bull trap. So while on one hand, we are seeing positive earnings, these companies are massively firing people, doesn't seem like a very healthy economy. So very healthy companies that are beating earnings estimates usually go ahead and hire more people. But in this case, yes, they are getting good numbers, but they are firing more people. So that should be a red signal in itself, telling you that there's a good chance that the market will be moving back down sooner or later.